we couldn't actually not schedule this like of live streaming today because it's all about inflation. As we keep saying since Monday, we have actually alerts in regards to this week and the focus on inflation. So let me quickly double check that you can hear me and see me on every single channel that we are hosting as Hot Forex. So Facebook looks to work just fine, excellent, and sound is working as well. YouTube okay, perfect. So we can actually start. Okay, excellent. So let's. We have already out European inflation, UK inflation actually quite early. Both of them were quite early. Were like most than 4 hours ago. We have already out the UK retail sales inflation and European inflation. And the only thing left for the day, the only two key events that actually left for the rest of the day is the inflation from Canada and the FOMC minutes, which are expected to add more volatility into the market. Okay, so we still have key events ahead of us, so you need to take care. I have seen your comment in regards to gold, Mohammed. Don't worry about it. Just let me quickly do a briefing, okay, of what happened so far today, and I will be able to start doing the live analysis as usual. Okay. Just a quick briefing of what happened so far. We have seen the stocks actually sharply lower, bond weaker as well, unable to benefit from this risk off flows. Okay, we keep seeing if someone actually attended my Instagram live yesterday, I spoke a lot about inflation and what's going on so far. So the theme remains inflation jitters and the spike in virus infections in Asia, more precisely, are the culprits. Okay, so these are the two main reasons that they kept futures and tech stocks globally under a lot of pressure. However, so on top of virus is inflation, which is correlated with the FOMC minutes later on, and of course with Fed. So now the markets are really worrying. The concerns actually there is a big wall of worry around inflation and how the Fed will react. So this, as long as we're getting data that increase the fear that inflation will rise even more, reaching to significant, like rising significantly. So the worry that could rise higher. Okay, this is something that could force the Fed, the Federal Reserve Bank, US one. Okay, as you already know, to pare back its support soon. So we might see the Fed hiking rates sooner than what is expected. That's why the markets are really turning their caution there to the Fed. This is what affects the market. This is why the U.S. futures are falling. This is why tech stocks are also under pressure in general. Remember, the technology stock sector is sensitive on fears of inflation, because higher inflation suggests rate hikes. Higher rates means expensive US dollar, so that is correlated with the consumption, with the sales of companies, and so on and so forth. So far, we have seen actually the focus is pretty much still on the stocks and commodities, of course, because commodities, since Mohammed and a lot of actually everyone is asking about gold today in Bitcoin. So I will try to remind you that gold is used is a commodity, it's a safe haven first of all, and it's an asset that is used for hedging inflation. So that is why is should be on your watch list. So as we've seen stocks sharply lower, bonds weaker as well, we have seen gold. Actually, let me show you as well gold. Now that you brought that up as well, we could see gold finding again the support, but that is something that might happen after the FOMC tonight. Okay, so guys, okay, since you're asking about gold, give me another 2 minutes to actually okay no actually let's start with gold, and later on as we shift into cable and euro dollar, I will give you a briefing in regards to the European inflation and to the um, and to the UK retail sales and inflation that came out early in the morning. But I'm sure you might already seen the data. So okay, let me share my screen. Screen 3. Okay, give me a second. Where's my MT4? Over here. Excellent. Okay, caption should be off. I'm on height. So let's start. Gold. Muhammad is asking about gold, and he's not the only one actually. So also Pathy Ranham, Muhammad twice. You're insisting there. Okay, Manchanta. Let's see everyone already in gold buys. Okay, Lowell. Okay, guys. Since you're asking about gold, excellent. Let's start with it. We had seen, actually, let me zoom out a bit, okay, and actually go to the weekly chart and remind you that the regression channel that I already showed you on Friday, right? We had a live on Friday as well. So this week, the gold managed to break my regression channel, my downwards regression channel, which is something that is not, it's a regression channel that lasted for a year now. Okay, it actually broke it. Let's shift to the daily chart. It broke it on Wednesday. Actually retested it several times last week, managed to break it on Monday, held a bit steady yesterday. But so far today, so now I will turn a bit to the 1 hour chart. Okay, this is the 1 hour chart. Okay, as you can see, we have a sell of the last 5 hours in a row, reverting 2 days gains from 1873.94, was it the high of the day? Yeah, reverting gains from the first resistance and dripping down and actually reaching the third support of the day down to 1852. So the good side, the bright side, the optimist side of this picture is that, for those that are interested in the daily chart, is that it still managed to sustain a floor, a nice support at 1850, which actually is 2 months resistance. Is a resistance that we have seen since February, March, April, 3 months resistance. So it didn't, it still sustained this nice floor at 1850 territory, which is 3 months resistance, which now is converted into our immediate support level, a key support level. Okay, and as you can see, is still, let me get rid of some of these lines, is still above my long-term regression channel. So what I'm trying to say is that the pullback that we have seen so far today, so far it doesn't affect this long-term rally that we have seen since the end of March. Okay, so in the medium-term picture at least, the outlook remains positive, okay? And I would like also to double check my, okay, so it still sustains a move above 200 simple day moving average. But because I'm interested to explain to you the 1 hour chart, I will bring that back to exponential ones, and I will get back to the 1 hour chart. So firstly, to see what explains this slip, okay, this drift, okay, this morning, it has to do more or less on the dollar, of the firm dollar, okay. Actually, it's like the anticipation of the meeting, so people are actually waiting for the latest round of Fed policy meeting to catch any hints in regards to interest rates. So because of all these concerns that we have seen, so that is something that caused a bit of a firm dollar. So if I just quickly show you a quick snapshot of dollar, you can see that dollar appreciated, okay, appreciated the last 5 hours. Okay, so this is what caused uh, in the very near term, short term, this slip in the gold. But as I already told you, that doesn't change this overall rally that we keep seeing, with the assets sustaining a nice floor above 80 hundreds, above 8050 as well, which is 3 months support, resistance area now turning to support. So the overall rally doesn't really change. And if I connect in my daily chart the the low the low lines, the low prices, or the fractals if you prefer, you can see that it's keep moving to the upside, posting higher highs, higher lows. So if I put a small near-term regression channel over here, okay, with less deviation, actually, I will want to detect this. Okay, no, okay, what have I done? No, this. Let's see. Okay, if I use this short-term regression, okay, you can see that it's still moving. I'm not sure whether you can see that as well. Actually, let me get rid of pivot so you can clearly see what I'm trying to show you. I will zoom in a bit. So if I just put a near-term regression channel since the bottom, since the beginning of this rally, you can see that despite this pullback today, due to the firm US dollar that drifted gold slightly lower, our gold sustains a move above the midline of this rally, above the 1850 territory, above my 1 year regression channel. So still the rally remains untapped. Okay, so let me also check, double check my intraday indicators. Okay, MACD rising, RSI rising, stacked a bit on the 70 territory. So, however, that's not necessarily bad. That because it still doesn't post the return, lower pullback, it still sustains positive momentum. Fast moving average are okay, are pointing to the right hand side. Actually, what I'm saying, I need to go back to the, okay, yeah, so positive momentum it is. So let's turn down to the 1 hour chart. You see, this pullback wasn't supported by momentum. Can you see that actually? Okay, you can see MACD at least. So this slip in the 1 hour chart wasn't supported by momentum. MACD, for example, over here, turned slightly lower, but it remained neutral. So RSI turned lower, but didn't cross 30. So that was like a limited decline. And now we have seen the top of this hour, the last 17 minutes, the asset trying to revert as we keep moving closer to the Canadian inflation and to the FOMC. Of course, FOMC are tonight, so we have around still 5 hours to go. Okay. Um, so yeah, we have, if this 1 hour candle actually managed to reverse to get back to, oops, wrong, to get back to 165 level, which is the mid of this decline, then we could say that it's back into track and will continue moving higher. Okay, for the time being, okay, we have seen fast moving average over here turning higher. Okay, RSI hasn't crossed 50 yet, so it doesn't really confirm us the reversal to the upside. MACD is very neutral still, and let me show you actually stochastic, which for the 1 hour chart is a bit, it's quite important. Can you see that? No, you can't. Okay. Okay, let me try do it the other way around. Excellent. So now you should be able to see my stochastic for the 1 hour chart. Have you seen that? It suggests this bullish crossover here of the fast and the slow line is a bullish cross which already move above 20, suggesting that, you know what, this decline is running out of steam, so it might start turning higher again. So this could be some profit taking, some closing positions ahead of the Fed, some kind of speculations, trying to boost the dollar higher before they actually sell it on top on the high level. So yeah, this is it. It's the anticipation of FOMC. I'm afraid there is not any clear, any significant reason behind it. So if I could say something about today's moves, is that there is some profit taking that has been triggered this sell-off today, partially driven by small rebounds on the US dollar ahead of the FOMC. Okay? But just to remind you, gold is used as it is a safe haven. It is used for inflation hedging. Okay, it's actually seen as hedge against inflation. Okay, so if the statement today, the means today from FOMC trigger or confirm that indeed, or they raise the concerns that there will be a rate hike soonish, then gold could be further supported. Okay, that could be another factor that could support further the dollar. So be a bit careful once the FOMC are out. Yeah, I think I'm covered gold. Hopefully everyone is, I managed to cover everyone's worries in regards to gold. So, yeah, guys, so if you're trading in 1 hour chart, then you should probably stay focused of any breakouts of pivot points or latest fractals and etc. But for those that are actually interested in the daily chart, nothing has really changed. Overall, we have an overall positive move with some correction so far today, but that's it. Just looks to be just a correction for the time being. Okay, so we are done with gold. Excellent. Let's move on. I cannot advise you what to do, my dear Helen, but hopefully I help you with my analysis, okay? Guys, remember, I cannot tell you what to do. I'm trying to explain the fundamental reasons of these moves, what the technicals are saying to us, and you need to do your homework. Take take your decision based on what you actually see. Okay. So, what time? Okay, Lucas. FOMC actually. Bank of Canada inflation are in 8 minutes now, and in 8 minutes from now. So we're gonna, as soon as see the inflation, the Canadian inflation, we'll see it together. Actually, it's in 8 minutes, so don't worry about it. And actually, worry about it if you have holding some kind of a Canadian intraday positions. So you need to keep an eye on the Canadian inflation for sure. Now, for the FOMC, we have a lot of hours ahead of us. It's at eight. Sorry, it's at 6 o'clock GMT. So I don't know in which where are you where are you living or something, but it's in 5 hours and 37 minutes from now. 5 hours 37 minutes from now. So yeah, so gold, it's been, we replied to all the gold requests. Okay, different ideas. What happened to gold? We have replied to that. Eric, it's just anticipation. This is what drive what drove this drift. Now, why has jumped? Oops, sorry. So, a possible reason for this jump, it could be some speeches from several officials, but let me double check whether I'm missing something, even though I cannot really see anything other than the fact that it dipped down and retest its the 1850, which is a key support area, touch the third support of the day. So I cannot really see something else other than a clear rebound on this oversold condition that we have seen in the near term. In the 1 hour 30 minute session, you can see that it has been outside Bollinger's for 1, 2, 3, 4, 4 hours in a row. So this might trigger some buying the dip movements from several market participants. I cannot really see something else that happened that caused this jump other than the overbought condition. So profit taking in the beginning of the day, buying the dip at the right now as we're moving towards the US Open. So take care of it today, because until we have FOMC out, we're probably going to see some ups and downs all the time. Okay, so let's see. Who knows? If you're interested again in the 1 hour chart, just follow your candles. See what your fast moving average are telling you. See what your short term indicators are telling you. And take your decisions accordingly. Okay? So let's move on. Someone is asking about Bitcoin. Okay, excellent. And the sell-off continues. Mr. Elon did his miracles, unfortunately, and we have seen this dip for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Okay, so we have Bitcoin slipping below 40,000 for the first time since February. Okay, that was one of my key support areas, and actually has been broken right now. So as you can see in this weekly chart, it was an area that it was initially a resistance back in November, actually heavily broken this week, and now is around 38,000, but it had posted a low at 36,266 low so far today. So um, uh, all the cryptos are actually driving lower. Ethereum is also dragged back to 3,000. So if we just focus on Bitcoin, it looks to be more of a technical place over here, and psychologicals, because we have some key support and resistance areas over here. So as you can see, actually, let me show you the daily chart. Okay, and okay, let's flip to, okay, this is the daily chart, guys. Okay, as you can see, uh, this is my 50 and this is my 100 simple moving average. But okay, so initially we had this as a nice floor. That's a nice resistance. Why? Because it was held quite nicely as a support for the whole 2021, while it was also a resistance area back in December, January, which now turned into support. So that's why I'm saying that we have most technical adhesive plays over here and psychological ones. So other than what's going on with the tweets of Mr. Elon. Actually, let me double check whether I'm missing something as well. But other than that, this turn lower and the breakout of this level added further bearish buyers, more sellers. Okay, might be fear. It might be a fear that the rally is running out of steam, and we might see another boom similar to what we have seen in 2017, similar to what we have seen in 2019. So it might be fear. It might be fear that caused more selling pressure over here and a drift lower. So we have seen, unfortunately, the last 2 weeks, cryptos crashing, okay, because as stocks actually dip. So cryptos, even though they are something that is not controlled by central banks yet, we don't really know the correlations with the rest of the markets. We are able to see that as stocks slip, the same condition we have most of the times in cryptos. So the the stock decline also caused cryptos sinking deeper so far today. And again, is this threat of this unwanted inflation, unfortunately, that spread this sell-off along with this technical place, with the breakout of this long-term support that attracted more sellers. So for the time being, Bitcoin has entered a negative outlook. If you can see, no, you can't. Let me put again the MACD for a second MACD so you could see. RSI today turned officially below 30, so it's in the oversold territory, and there is further steam to the downside. MACD turned negative with this bearish cross between the histogram and the signal line. So we could say that in the daily chart, the Bitcoin has entered into a negative outlook. And the next support actually is down to the 200-day moving average, which is actually really, really close to the floor that we have seen back in the beginning of the year. So this is the next support level that we could immediately find to Bitcoin. And as I have seen, um, So as I can see from other analysts or in Reuters, Bloomberg, etc., they did believe that what caused this decline, this deterioration, is actually a continued retrenchment by investors, by big boys, by institutional investors, and the breakout of key levels that attracted more sellers. So this cautious sentiment that in regards to inflation that caused a sell-off in equity, affected cryptos. So it will be interesting to see whether after the FOMC minutes, this decline, this drift will actually pause. Okay, it will be quite interesting. We should keep an eye on it because we can see that market participants, and I'm referring to the big boys, that actually the ones that are moving the market, the institutional players, we could see that um, because of the inflation, we could see that they appear to be shifting away from the cryptocurrencies right now and going back to the traditional safe haven, which is gold. Okay, so they are shifting away from on this uncertainty. As this uncertainty is hated, we're seeing a shift away from a Bitcoin, from cryptos, back to basics, back to tradition, back to gold, reversing with this way the trend of the previous last 2 quarters. But support remains the 200-day moving average. So let's wait and see. Intraday picture, decline continues. MACD extended. RSI turn against down to 30 again. Let me put my 5 and 9 exponential moving average. As you can see, indeed they keep pointing lower. So even despite the fact that it has already broken the third support of the day and the last two fractals over here. So yeah, negative bias it is for intraday, for the 1 hour chart in Bitcoin as well. So the same logic you could apply in other cryptocurrencies. So yeah, now we have, other than Mr. Elon affecting Bitcoin, we have these flows due to the inflation. Let's move on. Pound Oz. So Pound Oz, okay, excellent. Is an excuse to tell you also give you a quick briefing what happened today with the retail sales and the retail sales from UK and the inflation data from UK. Okay, guys, just the Canadian dollars, the Canadian data are out, by the way, and they beat expectations. Well, so we have rising inflation in Canada. I will come back to it in a second. Let's see the question from Helen about Pound Oz. Okay, Pound Oz broke today, as you can see, and I will zoom out. November, December, January, February, March, April. So 6 months resistance. Okay, it was broken today. Of course, it was already to the upside since the strong rebounds last week. Okay, but let's shift to the 1 hour chart. Okay, so okay, I have a notification since that Ethereum sank 25%. Okay, just for your own information. So Pound Oz. Yeah, guys. So let me. So we had retail sales, we had PPI, we had inflation, all above expectations, all rising. Actually, inflation, the yearly inflation from UK doubled since last time. It came at 1.5% in a year-on-year basis than the 0.7% that it was last time. And retail sales also increased significantly. So we have seen over here, and I think the same condition stands on cable as well. We have seen pound supported, boosting to the upside, breaking this long term, this 5 months resistance at 182.64, and sustain a move above it so far today as momentum remains positive. So, for the time being, for the 1 hour chart, my dear Helen, is consolidating a bit because it was overbought. You can see that some ups and downs. Fast MA is pointing to the right hand side, RSI flattened, stochastic trying to turn lower, so we might see a bit of a correction or consolidation. If it breaks this immediate support at 182.57, let me put also my pivot points on. I want to cross check something. Yeah, so we might see a bit of a very of a correction, especially if it comes back to 180 to 57, which is the floor that we have seen from 1, 2, 3, 4, 5 hours in a row. Yeah, as long as we see the asset sustaining for the day. Consolidation mode, and actually if we see a break of the latest high, then we could say that it could extend further to the upside, because overall the pound remains in a bullish mode. The pound is being well supported by fundamentals, by technicals, but mainly by fundamentals for any against any currency. Okay, so let's not forget the fundamentals around pound. Is the yield differentials, is the fact that the UK's main equity indices are replete with global focus cyclical stocks. Is the reopening, is the vaccination that they will vaccinate everyone by the end of June, is the data, so retail sales double, so everything is actually supporting the pound in the short term and in the medium term as well. So we had seen actually inflation for April today lifting to 1.5%, as I already told you. So it's more than double from March, okay? And it's exceeded slightly the forecast. The floor forecast was at 1.4%. It was a bit of a surprise, and it wasn't. Actually, it wasn't, because we were expecting the UK to keep giving signs of recovery, of growth. It's not this is something that is happening for a lot of months now. So they are giving signs of recovery. We had a bit of a we had also Mr. Bale yesterday trying to calm down the markets a bit ahead of the inflation today, saying that okay, inflation is expected to rise because of the energy prices, but he said that it will be temporary. So this might have calmed down a bit the fears around the UK inflation, in contrast with what's going on with the US. So yeah, everything is like boosting to a growth in UK. Consumer confidence is also growing, improving. Surveys are suggesting that UK has done a remarkable job in regards to vaccination program. So yeah, all good with pound. So if you are intraday trader, dear, keep an eye on the high over here at 182.97. A break of it could extend further to the upside. The pound and ATR suggest 25 points move in the 1 hour chart. Now, if it breaks the 82.57, which is the low the last 5 hours, then it could turn as a correction down to the 20 period moving average or even the pivot point of the day. But as long as we don't see a turn back to 180, 140, 180, 81 round number and the 38.2 Fibonacci retracement on this rally, then the overall positive outlook doesn't change. Now, we have discussed about Bitcoin, but I forgot something and I want to share it with you in regards to cryptos, something that also affected Bitcoin, Ethereum, on all the cryptocurrency market. Okay, because we have discussed Bitcoin, I will turn to Ethereum right now. Bitcoin extending lower on the. Okay. So something that also, let's turn to Ethereum now. Sharp sell-off. Boom. The daily candle is huge. That's not 25%, that's might be even worse. A sharp sell-off, breaking 20-day moving average, breaking 50-day moving average. Actually, a big sell-off for Ethereum over here. And another reason, other than all the things that we have discussed, is also China. So I forgot about that. I forgot to tell you that China ruled that financial and payment institutions should not accept cryptocurrencies as payments. So this might be the very first, the main driver of today's and since last night sell-off. Okay, so China said that they shouldn't use cryptos. So it's everything. It's inflation concerns. It's a China announcement. It's Elon Musk. It's the flows to safe havens. Everything is like dripping to a big sell-off to Ethereum, Bitcoin, and other cryptocurrencies as well. So this recent volatility in the crypto world can only have been actually a deterrent for many institutional investors, corporate treasuries, and to catch this ride. And that was initially started from when Mr. Elon Musk actually criticized Bitcoin, and he went from Bitcoin crusader to Bitcoin mining, Bitcoin record on the grounds of this high level of electricity produced from fossil power in China consumed and in Bitcoin mining transactions. So, actually, so yeah, it's a big Ethereum, Bitcoin, in general, cryptos are a bit of a hot potato right now because there will be also some ongoing regulatory responses from around the world after China reported that. So, many are not likely to be as limiting as China was yesterday. But yeah, the digital currency is a bit into risk right now. Let's wait and see. But I mean, like regulations like US had been so far more open-minded ones, okay? So we might not see the same reaction from them as we have seen from China. So far, Bitcoin and all the leading cryptocurrencies, even Ethereum, had managed to attain emergent asset class status. So by speculators and the digital version of gold, let's say. But yeah, unfortunately, the markets remain dominant by speculators, by comments, by tweets, and Bitcoin believers. So there is a lot of volatility, definitely, and we need to take care of it because this looks to be very, very challenging. Um, so yeah, cannot really say anything else about crypto, I'm afraid. Um, yes, as I already taught you there, so key support would be, oh, we'd already touched it. Jesus, what's going on today? Jesus. 36,228. Let me put my proper daily chart. So this has been broken. So 31,466 is my 200 simple day moving average, which is the immediate next support. Momentum is aggressively negative. We have a near full body candle so far, negative candle, a lot of selling. So the more it goes down, the more sellers are attracting apparently. Okay, so let's move on. Will dollar go down later? Okay, let's shift to dollar. So actually, dollar's been to the downside for a lot of days now, 2 months now. So the overall outlook, my dear, is negative. Now, if you are asking me about the 1 hour chart, what I can tell you is that it's consolidating right now. Okay, so RSI tried to reach 55, but it's turning like flattened, suggesting consolidation. MACD is still negative, it hasn't turned positive. But what is more interesting is the fact that stochastic had a bearish crossover here and is turning lower. So this jump for the time being looks to run out of steam as momentum remains neutral to negative. Okay, so keep an eye on a cross of the price, the break of the price below the breakout of the pivot point. So at 89.85, if we have an hourly candle closing below this level, then we could this could suggest a reversal to the downside again. But overall picture remains negative anyway. Euro Oz. So another excuse to tell you what happened with the European inflation today. So we had a confirmation of inflation at 1.6% a year basis. So in line with expectations. The core dipped slightly to 0.5% from the 0.6%, so a slight drop in the core numbers, which actually is something that highlights that the acceleration reflected in the headline rate in the overall inflation number was mainly due to the base effects from energy prices. So the report actually backs the assertion of ECB that inflation pressures are transitory. With no risk that inflation expectations will rise to an extent that will force ECB to taking a less accommodative stance anytime soon. So it's not the same conditions as we've seen from the US. The inflation from Eurozone today, it was a good one, confirming that indeed ECB's statement that inflation might be transitory, and there is no risk that they will rise, or they will not there will not be any risk that could force them to change their policy. Is something that gave a relief to euro, that we have. That's why we have seen euro keep extending higher. Okay. um, um, Euro remains to the upside, supported despite some warnings from Guido, or from who else spoke. Yeah, we had also the financial stability review earlier. Despite this, we keep seeing that euro is actually sustaining a nice positive bias so far today. So euro also over here, my dear. ET, extending gains, broke this near-term resistance, and extended to 157.86 for the time being. MACD positive. RSI is overbought, but still pointing to the upside, as you can see. Stochastics, if I could show you as well, stochastic. So over here is stochastic. You can see that it doesn't really turning lower yet. It's at 80, consolidating. So that suggests that the positive bias remains. And what is strengthening the positive bias in the 1 hour chart is also the fact that the fast moving average are keep pointing higher. So it looks that it hasn't reached to a limit yet. It hasn't reached to the end of this rally. There is an increasing positive bias in the 1 hour chart. Daily, the fact that it crossed and broken today these 4 months, no, actually, yeah, 3 months resistance, and went back to the beginning, the highs of the year, is something that turns the long-term consolidation into a positive outlook for euro Oz, especially if, oops, if we manage to see, can I put that on? Yeah, I can't. If we manage to see the asset turning above the 200-day moving average, which coincides with 38.2 Fibonacci level and the highs, the year's highs. This is somewhere around 158.67. So yeah, in the long term, breakout of that could suggest the start of a long-term rally for Euro Oz. For the time being, positive bias sustains in the in the daily picture, and in the intraday picture as well. Whew. Okay, pound. Sorry, pound turned a bit lower on the firm dollar, but consolidation sustains right now. Well, actually, indecision sustains, not the consolidation. It found the floor on the first support of the day. MACD turns slightly to the right hand side, suggesting that it might not continue to the downside. MACD is flat, RSI is flat, stochastic, no indication from stochastic. So this looks to run out of steam, but we cannot really tell yet until we have a decisive breakout either of this low. So a breakout of this low could open the doors to 140.78. Otherwise, a turn back higher again, okay, and more precisely, if we see a bullish cross of this fast moving average to the upside, then this could trigger our attention again to the upside and to the 142 territory, okay, or even higher to yesterday's highs at 142.80. Swiss yen, oh my god, a lot of interaction today actually, and I quite like it. Don't have Swiss yen. Dollar Swiss. By the way, okay. This is dollar Swiss. Swiss yen, Swiss yen, Swiss yen. Okay. Yeah, I think I didn't tell you anything about yen. I didn't discuss with you yen. That's a shame. Uh, given given in mind that yen is actually give me a second, guys. Having in mind that yen actually is a risk sensitive asset, and it's a safe haven as well. Let's not forget that. So we have seen actually yen reacting a bit opposively across the majors so far today. So, for example, the dollar yen extended higher on firm's dollar. Now it's turning lower. But in regards to Swiss yen right now, okay, it kept moving to the upside, okay, extending gains with extended MACD as well. RSI at quite well supported. A bit of a dip right now, but not significant because it looks to be just a consolidation of this, like a correction of this rally. So overall, Swiss yen remains in a strong positive outlook. And the only what could change this positive outlook into a negative, it will be a turn below 120 or even below 119 19 actually 1950 or the 20-day moving average. So this is a key support level. 120 and 119.85 is a key support level for the asset because it suggests a 23.6 Fibonacci retracement, but also the breakout of this latest support, which coincides with the 20-day moving average. So only a turn back down over here could start signal a reversal from this rally, a reversal from an upside move to the downside. So overall, Swiss yen remains in a positive outlook in the daily chart. Now, intraday, we had a big sell-off, so yen is actually benefiting so far, because let's not forget that that uh, that yen actually, I think, from yields differential is in a the Swiss is beneficiary against yen due to the yields differential. Overall, the risk off conditions that we have seen so far have not benefited this risk sensitive yen, but against the Swiss it indeed benefited. Okay. But overall, against the other currencies, it didn't really benefit yen. So big of a pullback also in euro, but not sharp. So we have some kind of a reversal, but this looks to be more or less like safe haven flows ahead of FOMC. It might be it. It might be it. I'm not quite sure what's going on over here. But overall, the picture for Swiss yen, as I told you, doesn't really change. Um, yeah, let me double check whether I'm missing something. No, I don't know. I don't think I do. Excellent. So, dear, we have a sell-off indeed. You find it well spotted. Well spotted for bringing that up, down, breaking pivot point of the day, sharp sell-off. It's keep extending lower. 120.79, breaking the previous two lows over here. It was yesterday and Friday as well, so it broke that level. So the next support level could be found at 120.50 and 120.21. So in intraday, the Swiss yen has turned aggressively lower. Fast EMAs are keep pointing lower. MACD turned negative. RSI crossed 28, and there is further steam to the downside according to RSI. Stochastic also turned lower, and it kept, even though it's in the oversold territory, it just pointed another bearish cross over here. So there is a lot of selling still on Swiss yen. Need to cross check whether there is something that I'm missing, whether it's just all this flow from Bitcoin and Ethereum going into more traditional safe havens like gold, Swiss yen, and etc. Yeah, I don't think I'm missing something, but definitely yen remains one of the gainers of the day so far, along with dollar as well, and pound as well. So yeah, that was on Swiss. Uh, okay. Oh, a lot of you ask about Swiss yen. It's my old trade. I was waiting for its turn. Okay. Broken the last two fractals that I had in the 1 hour chart, broken the 200 exponential moving average that I had, broken the first support of the day that I had. All momentum indicators are negative, negatively configured. Fast EMAs are pointing lower. So this is the one chart, and there is a lot of selling pressure still. Daily chart remains to the upside as long as it doesn't break the 118.19, the 120 or 119.85 level. This nice floor over here. Now, okay. Oof, a lot of. Okay, okay. Stocks. Fair enough. Even though I'm running out of steam, guys. Sorry for drinking a bit of water, but. So where is my S&P, Nasdaq, and Dow Jones? Where are they? Okay, you ask about Nasdaq and Dow Jones, dear. Okay, we have a sell. We had a sell-off. Don't forget that. It's inflation. It's something that is not new. It happened since the beginning of May. Sell-off. Double top of it, bottom over here. Retesting once again this the last week's floor at 12,918. So we have a negative outlook so far for stocks, especially Nasdaq, because it's a tech-heavy asset. Um, so, uh, so yeah, 3 days in a row to the downside. Um, 3 days to the road to the downside. MACD turned negative, even though it's quite close to zero still. RSI turning lower. Stochastic turning lower. Let me double check my long term. It's below the 50-day moving average. Bolligers are extending lower, so there is a lot of the asset is in a negative bias, is in a negative rally, as long as we don't see at least a break whoop, why I cannot put that on, a break of this trending line over here, trend line over here by connecting the highs. If we don't see a break at above it, or even a reversal above the 38 and more precisely the 50-day moving average, the asset remains in a downwards trajectory. So if it breaks this floor over here, the next support comes down to 12,610, which is the floor over here and very close to the 200-day moving average. So 12,601 next support. If this level breaks, along with the 12,550, which is the 200-day moving average. Negative bias remains for Nasdaq. Intraday now, things are quite clear. Sell off, sell off, sell off it is since yesterday. Let me put the 5 and 9 exponential moving average already below the 30 support of the day. Fast MA is pointing lower. RSI is actually at 25 in the overbought territory. MACD extending losses, extending southwards. Stochastic still negative, doesn't really give any hint of a reversal yet. Okay. You see, it doesn't really, it hasn't really rebounded or something. It doesn't really change that the near term and the medium term picture remains negatively configured, remains in a negative outlook. So yeah, that's it, my dear Helen. Hopefully that helped you. We've seen euro dollar. No, we haven't seen euro dollar. We have seen euros, I think. Yeah. So euro dollar broke yesterday a nice key resistance area at 122, and actually the good thing about it is that it managed so far to sustain this 122 level. Can you see? 122 is a round number, is a key level, key resistance level that hasn't been broken for the whole year. It managed to break it yesterday with this decisive daily candle, consolidating or pulling a bit lower so far today, but sustaining a nice floor above this level or quite close to this level. So overall outlook for euro remains to the upside, especially after the inflation from euro suggested that there won't be, it's unlikely to be any change in the policy from ECB yet. So this could further support euro against dollar. Okay. So we have a bit of a consolidation around the pivot point right now. Consolidation is the theme in this 1 hour chart, but having in mind in the daily chart that the fundamentals are supporting euro against dollar and that the daily picture remains positive. So a break of 122.45, which is the high that we have seen back in February, could bring into our attention the next high back in January and the 123.80 level. Now, intraday, because I know that you like intraday more. A close of the hourly candle below pivot could retest the first support at 121.70. Okay. Now it's trying to reverse as we're moving towards the US Open. So a full turn and a breakout of 122.45 could bring back to your attention the resistance areas at 122.86 or even 123 level. Okay, so keep an eye. Right now in the 1 hour chart, I cannot really see something. I cannot see confirmation. Okay, let's me move back to the 30 minutes chart to see whether there is a signal or something. Nothing. Sideways. Not even my fast moving average are telling me something. So wait for a cross, wait for a confirmation, wait for a signal. Okay. So let's move on to the next question. Okay. Okay, who is next? Who is panicking and why you are panicking, my dear Honey Penny? Okay. I don't know why he didn't tell. So we have seen what happened to gold. I will not speak about gold anymore because we spent more than an hour on this jump, on this jump, which I cannot really identify with this, whether it's just a bind the dip reaction over there. Uh, yeah, looks to be just technicals, guys. So Bitcoin and cryptos and Ethereum from the one side looks to continue in a sell-off because traders are in a fear. The breakout of significant key support levels spread more, the attracted more sellers, spread the fear. So we have a lot of traders liquidate right now. That's why we've seen the flow from cryptos into gold. While this jump at the in the last hour on gold. I'm not really sure whether something did happen and I missed it, but it looks to be just a bind the dip or something reaction. I haven't identified something else. My apologies for that, but I cannot really see from my newsfeed something that could actually fundamentally at least support this jump other than the oversold condition and the buying the dip condition that we might have seen over here. Um, yeah, money are moving apparently from cryptos, from bonds, from stocks to gold. Okay. So other questions. We have seen euro dollar TR. Tell me please, euro dollar doing too high or dropped? It's very well supported for the time being. It's dropping down. Dollar is dropping down. Yeah, trying to, but hasn't been confirmed yet, my dear Jude, at least in the 1 hour chart. Dollar yen, I think 109.03 zone. Okay, so we had a sell off, turn down, yen benefiting against dollar, risk. Remember, it's all about risk. Okay, it's all about sentiment, it's all about risk. So dollar yen under pressure, falling. Actually, the whole market is recoiling right now. You need to wait for the markets to calm down a bit because there is a bit of a lot of volatility apparently, which I cannot really find out whether there is a reason for that or it's just strictly technical. Um, all this. So down to the first support of the day, the short term momentum turned negative, but the overall picture remains sideways for dollar yen. So dollar yen remains in sideways movement in the daily chart, intraday sell off. The fast MAs cross negatively. So next support is down to 108.53. Okay, and the 108.26. The next support for dollar yen. Woohoo. You're very most welcome. I'm glad to help you, dear. Thank you for your nice words, dear Bach. Uh, okay, the rest of the questions are regards to gold. Christopher, did you manage? Christopher and Horon Roper, have you managed to hear me explaining gold or not? Luan, you explained something about positive bias and bias, but I don't know for which asset you're referring to. So from your comment, I can see that you know what you're doing. So you're doing your own research, and that is very much appreciated because you need to do your own. You need to find out your strategy, each one of you. If, for example, pound starts being short, does it short across all its forex pairs? Not. Wait a minute. No. No, it depends. No, it depends. It depends. If it's a long term, if we are referring to the long term, yes, it should be if the fundamentals reasons, there are some strong fundamental reasons behind this short pound. But now for intraday picture, for 30 minutes chart, 1 minute chart, you cannot really, no, you cannot rely on this kind of assumption there. You need to do your own analysis for each asset separately. In regards if it's a pound cross, you need to do your, because, for example, euro pound, okay, euro pound, pound was okay, let's take some examples to quick examples. So pound yen in a sell-off, okay, pound yen, so yen stronger than pound, right? Okay, the same situation stands for euro pound over here. Pound weaker than euro. Okay, but overall sideways. Let me find actually different example. So over here, okay, for example, pound is the strong currency of this cross. So yen against pound is strong. Okay, so pound is weak against yen, but pound is strong against Aussie. Or pound, let's see cable as well. Pound is also strong against, actually is weak against dollar for the time being for this 30 minutes chart. But yeah, you need to check everything separately if you are referring to near term performance. Now if you're referring to the long term one, weekly, daily, weekly, yeah, it should be traditional. It should be the theory, because the theory, actually the fundamental reasons why an asset is positive, the outlook of an asset of a cross is positive, should be fundamental reasons, the economy of the country, the basically the economy of the country. So yeah, in the long term, this could take it as an assumption. But remember, this is a comparison. So it's like over here, the pound dollar, we are comparing the UK economy with the US economy. Okay, even if both are strong, if both are doing good, if they both recovery, there is a comparison. So which is doing better than the other? Okay, so don't take this for granted. Don't think that, okay, pound looks short, I will short everything. No, that's not logic thing to do. Do your homework, do your analysis, check, find out first of all the time frame that you wish. If it's a near-term time frame, intraday time frame, focus on the technicals and on the data releases. If you are a long-term trader, focus on the fundamentals, how the economy is doing. Okay, is it improving? Is it not? Reasons that are supporting or reasons that could weigh on the economy, on the currency of that country. So, guys, I need to call it a date. I will finish with dollar CAD just because we have the inflation data out. Okay, so even though the inflation data were positive, actually breaking, actually beating all the estimates over here. Whew, that was a long one. I got tired of it. Even though the Canadian inflation beat expectations, um, uh, there is the dollar CAD initially. I will put the 30 minutes chart. The dollar CAD, as you can see in this 30 minutes chart, initially dipped down to 120.50, the pivot point of the day. Once the headline inflation came out at 3.4% higher than the forecast and much higher than the previous reading. But the markets afterwards, they turned to the upside, and that it looks to be a more skeptical mood regarding inflation. Okay, um, the inflation rise. So this is something that could weigh on the Canadian dollar in the near picture. So we might see the Canadian dollar actually weakening against dollar because of this inflation fears. But okay, what else did we have? The home prices are actually rising. Also, oil is drifting lower, something that weighted on the Canadian dollar, dipped lower. So, okay. In the long term, dears, the let's get back to dollar CAD actually. In the long term, the dollar CAD remains in a downwards trajectory. Okay, okay, in a very long downwards trajectory, so it remains in a very negative, negative outlook. There is no sign of a reversal, so remains to the downside. Intraday, however, this bounce, okay, this reversal on the inflation concerns and on the rising inflation from Canada as well, which actually came well above the last reading, added some concerns along with the dip of oil. So we might see if the asset over here breaks the 121 level at the top of the hour, we could see another attempt to the upside to 121.20 and yesterday's highs at 121.40. But if it struggles to break the 121, a turn lower and more precisely a turn below 120.70 in the 1 hour chart, and more precisely a reversal back to the pivot point again, it could extend asset to the downside again. Okay, because for now this rally is not really well supported. MACD is very close to zero, so not not a confirmation for a continuation of this rally. RSI is at 58. Again, that is not pointing to the upside. The only one that is pointing to the upside is stochastics, but the flattening of moving average are suggesting that there is still not the rally runs out of steam. We need to see a break of the hourly candle, a closure of the hourly candle above 121 in order to suggest that it could reach the 121.20 or even the 121.40 today. If it turns down below 120.50, then the decline could be resumed. Okay, guys, I need to go. I'm quite tired. Thank you very much for attending. Hopefully, I helped you. Take care tonight, okay? Take care. it's FOMC. We might be see even more volatility than we currently have. So yeah, try to be very careful. Okay. Thank you very much for attending my live streaming. Hope I help you. Give me your feedback. Your feedback is very well appreciated. And see you again on the Friday with Stuart. A weekly wrap up as always. So yeah, see you then. Thank you. Bye bye.